Peak Wealth Management proudly presents Finding True Wealth with certified financial planner Nick Hopwood and accredited investment fiduciary Jim Pilat. Nick and Jim believe by making simple, good financial decisions, you can retire with confidence. And now, let's turn it over to your hosts, Nick and Jim.
Welcome everyone to episode 114 of the Retire with Confidence podcast. I'm Nick.
And I'm Jim.
And we believe by providing education and guidance, we can inspire you to make great decisions so you can retire with confidence. We just got back from spring break. Jim's looking tan.
Yeah, it was a well-deserved break, I feel like. Well overdue break, maybe that's a better way to say it.
I feel like I'm on break right now. Break is after I get back from being with the kids on break for 10 days.
Yeah.
Well, tell us about Disney World.
Yeah, we had a great time. Went down to Orlando, did the Disney parks. Went with another family, great friends of ours, and just really enjoyed it. I feel like we've been several years since we've been down there. So my youngest, Brett, is a 10-year-old now, was probably 2 when we went last. So we felt like we owed him one more good trip, and we were able to get down there and do it. It was a lot of fun.
I heard you did it the right way too.
We did. We had a couple tours lined up, and that was a great experience.
Awesome.
Being able to kind of get guided around those parks. It was
wonderful. So with Disney 35% capacity and masks and everything, like, was it still, you know?
It was still fine. And the capacity was nice because the waits were short.
Or non-existent.
Or at times really they were non-existent. We had a couple times where we really, with our tour, we were able to kind of speed to the front, and there was really not a lot of waiting at all. So that was great. Masks were, not ideal in a 90-degree day, but I don't know. Unfortunately, at this point, I feel like we're gotten so used to it that it wasn't as much of a nuisance as I anticipated.
Cool.
Yeah. How about you? You went down to Florida as well?
Yeah, we were on Marco, staying with my in-laws. We had some good weather, and we were able to get a couple extra days because of we bookended the weekends.
Oh,
and that worked out well with flights.
Good.
And we had, like you said, is hitting 90 degrees.
Yeah.
And we had some nice days at the beach and playing a lot of pickleball.
Oh, nice.
A lot of family fighting.
Over pickleball?
Everything.
All right.
That's why I said it's great to be back, right?
I get it, yeah.
Yeah. So anyway, what are we talking about today? We're talking about Robinhood and a specific story that actually came to our attention while we were out of town.
Yeah, it was very interesting because there's been so much talk about Robinhood, right? And the Robinhood traders, and they've really swung some individual stocks pretty significantly, like some of the most well-known names like GameStop and AMC. But it's piqued a lot of interest, but the story that we came across had some interesting repercussions to it that people probably weren't often thinking about.
Right. So this guy, I think he had like $50,000 in his account or something like that, which I hear is 50 times larger than the average Robinhood account, by the way.
I think you're right.
But the guy had $50,000 in his account, and when he went to file his tax returns, it was determined that he had an $800,000 federal tax bill.
Yeah.
So how in the world could that be the case, right? Even I was like, wait, what a sec. Like, I have to read this.
Right.
Because I thought maybe it was clickbait.
Yeah.
But it's legit.
It was legit, yeah.
I'd love to read the follow-up story with this guy.
Right. Yeah, to see how it all works out in the end, right?
Yeah. So how can you have a $50,000 account and have an $800,000 tax liability?
Yeah, I think the one thing people don't think about in a taxable account, right, a non-retirement account, every buy and sell has a tax consequence to it. And I think really what this trader got himself into was the wash sale rule, right? If you sell a stock and buy a stock within a 30-day window, you can really create some problems where losses can't be offset and things like that. Gains get added to the cost basis, and it just continues to grow.
So I believe that the article referenced the amount of his trading. He said he was placing trades all day, every day.
Yeah.
And he was trading
10 to 50 trades a day.
Trading hundreds of thousands of dollars throughout the day with a $50,000 account, right? So he was churning it many times per day, right? And so if you sell something for a gain, right, that's a taxable gain. right? And then the next trade is a loss, right? And you, in theory, are able to write that off against your gains. But if you buy the same thing, sounds like every 5 minutes, and you keep buying and selling all day, you can't write off your losses. Right. So you only are reporting the gains. And if, let's just say, 50% of the trades were winners and 50% were losers, he's only paying taxes on the winners, and he's trading at such high volumes, there's your liability. Right. All short-term gains.
Right.
No losses to write off.
Yeah, he needed to wait 31 days to be able to write off any of those losses. But like you said, the frequency of it, which is just insane, 50 trades a day on the same position, obviously it created a huge problem for this guy.
Yeah, so I feel like, there's got to be some sort of relief, right? Like maybe there's a GoFundMe, I don't know, right? but I feel like I would be able to, I feel like you should be able to like write a letter to the IRS and get some relief, but who knows?
Ignorance, right?
Yeah.
Just say, I don't know what the heck I'm
And this
doing.
like if the guy has a normal job,
and it said he did.
It could ruin his life.
He makes like $60,000 a year kind of deal.
So he could be, this tax liability could be with him forever.
Yeah, the IRS is somebody that you don't want to be in debt with.
Correct.
They don't forget.
I mean, the penalties and late, and interest, and it's just going to be terrible.
Yeah.
Feel sorry for him.
Yeah, it's a real nightmare.
Yeah. Only if it was an IRA, right? No issue.
Right. Because the tax deferred, you could have continued to do that all day if you wanted.
So let's, this is nothing new, right? We're a couple months late to the story. This is not a breaking news podcast, right? But let's talk for a second about the GameStop and the AMC. And by the way, we're talking about specific securities here, but this is not intended to be any kind of recommendation to buy or sell. It's just for entertainment and education in this purpose.
Yep.
Yeah. So we have the GameStop, the AMC, the silver squeeze, this narrative of the little guy going up against the hedge fund titans, right? So let's talk about that. When I say GameStop, what do you think about?
I mean, it was the catastrophic rise that it had in such a short time. I mean, it's a company that was on bankruptcy's doorstep, right? And it was the most heavily shorted stock in the market. And the individual traders more or less decided, hey, if we start buying it, the shorts are going to be forced to cover, right? So they kind of all went in together and just said, let's buy it, let's bid it up. And every time the shorts had to cover, they had to buy, which pushed it up further.
So that's the short squeeze aspect of it, right?
Yep.
So it went from like $20. Well, it went from like $6 up to 20, right? And then after that is when it shot the moon, and it went up to like 250, even like 350 in after hours, right?
Yeah.
So that, the shape of that chart is exponential. And we know that, those exponential charts are doomed, right? Doomed.
Yeah.
You have to stay away from that kind of stuff when you see the chart
right
like that. But everyone's so emotional, right? You think, I can't miss out, fear of missing out. And then, you think it's going to literally go to the moon, and then you're left holding the bag because you're late.
Right.
Right.
The last guy out is going to be in a world of hurt.
Right.
Yeah, and that's the problem with trading stocks like that, is you never know when that moment is, right? Is it when it went from 20 to 60? Because that's a monster move, right? In such a short time.
That's already exponential.
Right, and then it went from 60 to 120. You just got to double. Are you at the top? No, right? It kept going up. So people, like you said, fear of missing out. So people jump in, everybody jumps in, the Robinhood guys. That's why this guy trades so much, right? Because he doesn't want to miss out. He thinks it's going to go on forever.
Good point. Real good point. Let's talk for a second about the narrative that developed of the little guy versus the hedge funds. I never bought into that. I just kind of sat back and kind of laugh. It's an interesting story, right? Like it goes along with the whole Robinhood, the namesake, the nameplate and everything. But I just never bought into it because, these little guys, they want to make money. The hedge funds, they want to make money. Their number one objective is not to hurt someone else, right? It's buying in because they think that they can ride the wave, right? It's not, well, I'm going to try and make money and hurt you at the same time, right? That's all it is. It's trying to make money. And it was like a side thing about the whole hedge fund thing. And I think that people talk that up a lot more than it really should have been.
Yeah, that's a good point. They saw an opportunity. It wasn't an opportunity to stick it to the man, right? It was an opportunity to make some money because they knew the dynamics of the short positions on that stock created an opportunity to make it move and do just what it did.
Exactly. So we found another article kind of talking about this theme of all the individual retail, the small guys investing more, and we call it fund flows. So 2020 saw remarkable fund flows relative to the last 10 years from retail investors. Yeah. What did you find out?
Yeah, it was just another headline that caught our attention that talked about the flows within the last year equaled, I can't remember the exact, was it the last 10 years worth of
something
flows
like that,
or something like that? Yeah, so I mean, it just really stood out to me because I think it all ties into the same things that we're talking about, right? Is people, the fear of missing out, and all these people that had a couple $1,000 on the sideline said, hey, I got to get in on this, right? And like Robinhood, right? They make it easy, they make it fun, they make it like a game, right? You buy a stock and confetti falls from the sky and things like that. So people get in on it. So there were huge flows of new money into the market that has been a catalyst for maybe some individual stocks, but even maybe the market as a whole.
Agreed. And it reminds me of 1999. I was in college, okay, and we were opening our online brokerage accounts with, Ameritrade back then. Daytech, anyone?
Oh, wow.
Remember that one?
Yeah.
They had the streamer. That was awesome.
Yeah.
So actually, Ameritrade acquired Daytech back in the day. So I technically had my Ameritrade account open since like '98.
Yeah.
Right.
You're in early for sure.
One of the first. Yeah. So anyway, in '99, we saw the same type of action where the tech stocks were getting bid up, and they had these exponential charts. And we know how that ended. And the highest market cap in March of 2000 was Cisco. And that company hit like $82 a share back in March of 2000. And it's still not back. So we're like 21 years later.
Right.
You've still lost money.
Yeah.
And not just like a little bit. I mean, like you're down a lot.
Right.
I think that Cisco is like 50 or something right now. And it was 82. So when you have these exponential moves, maybe you'll get your money back, but it might be 20 some years later, right?
Right.
And a lot of those companies went out of business. So who knows what's going to happen with a GameStop, with an AMC. AMC raised some money, so maybe they have a little bit of a runway to go. But you think about theaters, right? And I can't remember the last time I went to a theater.
Yeah, it's a changing business for sure.
Sure.
Hollywood's kind of gotten comfortable putting movies straight on streaming services.
Yeah, and I love my HBO Max because I can watch King Kong Godzilla without the $10 popcorn, right?
Right.
And I watched it, but I was not impressed.
Oh, okay. Well, the numbers looked good on it, but I think it's because people were so starved for anything new.
Yeah.
Right?
My son really liked King Kong all of a sudden, so he liked it. But the story was terrible.
Yeah, okay.
So what was I saying? So so in '99 we had online trading, and the same kind of thing happened with the tech stocks. Now we have the Robinhood, the stay-at-home situation, the stimulus checks, right? There's people who like to gamble and bet. They can't. There's no sports, so what do? They turn to stocks.
Yep.
Right, and we like to say every once in a while you hear someone say that the stock market is a casino, and here it was. It really was.
Kind of proving it there.
Normally, not so much the case.
Yeah.
It's an investment. It's not a bet. But these were bets.
Yeah. Yeah, and when you see those moments of kind of irrational trading or irrational price movements, and that's where it does become a little casino-like, but as we saw in '99, they're often short-lived, right?
Yeah.
And they don't ever really end well, right? I remember '99 really well, and there's still have a lot of painful experiences from it, right? Because you thought it was going to go up forever, but the floor always falls out at some point.
Yeah, imagine as a kid, right? And I was like 18, 19, 20 years old, taking those huge losses, right? And it's like that was my first investment experience.
Yeah.
Right. So it's like, when it was like a 5-year-old learning a life lesson.
Right.
Right. Because I was basically an infant in the
Sure.
trading and investment world, and you have that severe beatdown, and you never forget it.
Mm-hmm.
So
Absolutely.
I
Yeah.
think you're right. One more thing with Robinhood. What was interesting was and I don't understand how all the prime brokerage stuff works. I don't even pretend to be an expert in that area, but they had to say you can't buy these stocks anymore because of the risk that the brokerage firm itself was dealing with, and they had to raise $2 billion like overnight.
They had real liquidity problems.
They did, right? So, I found it very interesting that they had to throttle what you can buy. I find that, I mean, they wouldn't do it unless they had to, but it's scary.
Yeah.
Right? It's scary.
Yeah, and for those active traders, I mean, that put them in a really bad spot. If you were in a position where you couldn't make a trade you needed to make or do something, to have Robinhood kind of shackle you like that was really frustrating, I'm sure, for a lot of people.
The last time we saw something like that was with Betterment, which is the robo-advisor back. When was Brexit? 15? I think it's 2016 or 2015.
Yeah, sounds about right.
So Brexit announcement was like Wednesday, I think. And then on Thursday and Friday, the market sold off. Okay, and Betterment shut it down. They said no sale orders. So if you needed money, you couldn't get it. And they said they did it to protect their clients. And ultimately, the market, rebounded. But if one of our clients calls us and they say we need money, whatever reason, I'm buying a house, I'm buying a boat. We got to work in the boat to every podcast. Okay, I'm buying a boat.
Fair, yeah.
Or I'm scared. I want to put money in the bank, or I need my mortgage payment. To say no.
Yeah.
Come on.
That's a real problem.
That is.
Yeah.
So anyway, this is kind of like a new world, right? I think that Robinhood's here to stay. They're huge, right? And one thing that's great about Robinhood is that they had free trades, and now free trades are everywhere. So they kind of disrupted the market.
Right. Yeah.
So I like that. But the whole short squeeze, GameStop, all that stuff, I have no interest in that.
Yeah, I think, and even at this point, right, like you said, it's been a little while. I think a lot of that's kind of died down, right? A lot of those guys that were making money thinking this is the greatest thing ever have now lost a lot of that money and have no gains to show for it and think, well, that wasn't so fun after all.
Yeah, my favorite is on Twitter when you see the guys announce that they've quit their day job and now they're going to be a full-time trader.
Yeah,
I love it.
I mean, I think this should be a takeaway from it because I feel like we saw it in '99. We're seeing it again, right? Trading is hard.
Yeah.
Like, people don't realize how hard it is to trade, to get in at the right time, to get out at the right time. Even the best traders in the world, they're lucky to get it right 6 out of 10 times.
Even Mr. Zach Morris got ran out of the gym.
He did. Yeah, you're right. But yeah, it's such a hard thing to do, and everybody wants to win the lotto, right? They get rich quick. But every time I see this, it just kind of reinforces to me that slow and steady wins the race. Just make good decisions, save money, invest well, and it'll work out.
That seems like a good point to wrap it up on. So, if you have a portfolio of $500,000 or more and you're interested in a second opinion, you can learn more at
peakwm.com. You can schedule online and everything. We got online booking available.
Perfect. Thanks, Jim. Thanks for watching. Thanks for listening.
You've been listening to certified financial planner Nick Hopwood and accredited investment fiduciary Jim Pilat on the Finding True Wealth podcast, sponsored by Peak Wealth Management. You can learn more about Peak Wealth Management by visiting peakwm.com or follow on Twitter at nhopwood1.